If you can bring yourself to hate this market, then you'd hate any market. That's how I feel after looking at some of today's top performers. In an otherwise strong session where the Dow gained 404 points, S&P climbed 0.8%, closing a smidge below its high, and the Nasdaq jumped 0.97%, all helped by a statement out of the White House that said the upcoming July 9 trade deadline wasn't critical. Good news, because we have only seen one deal so far with the UK, and we're getting more than a tad nervous about what would happen 2 weeks from now. For much of the tremendous run over the past decade, critics love to point out that most of our gains were coming from a small cadre of tech stocks. First, it was FANG, Facebook, Amazon, Netflix, and Google. Then it became the Magnificent Seven: Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. Over and over again, as the market roared higher, we were told that the rally was so narrow that it could not be sustainable. You couldn't have a handful of companies that were worth trillions of dollars, then hundreds of stocks in the tens of billions, but nowhere near the valuation of these tech titans. Made no sense. They told us it was only a matter of time before these false idols would be smashed and your gains would go up in smoke. I get that view. I've heard it all my life. There was a time I even believed in it. But if you're actually in the market every day from scratch, trying to notice what doesn't work, what can get you hurt, what can keep you out of tremendous gains, then you know there's another way this situation can play out. Sure, narrow rallies can collapse in on themselves. That can happen. Or, you know what they can also do? They can broaden out. And then the market keeps chugging higher and higher, chugging higher and higher without the sages who told me to get out.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.